market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Most of them have opened up on the positive footing. Now, Taiwan Index and Hang Seng on the flip side have opened up in the red.
This is big, and it's in terms of regulatory action, perhaps as big as it gets.
Reliance Retail now looking to hive off the part of the business that dealt primarily with FMCG.
The market's up. Markets actually opened higher. It's opened better than what the implied open was indicating.
Last day of the week, but it is such an action-packed day so far.
They will have to deposit 4,843 crores with SEBI.
This is a lot lower than their 5-year CAGR of 35%.
The skill set which India is offering for all kind of industries is superior.
At a point in time, we were down as much as 70 points. From those levels, we did see a recovery.
Well, that was the day so far. Things continue to remain very quiet as we come to the close of this trading week. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Surbhi Upadhyay. And Surbhi, once again, we've pretty much oscillated within a tight band. It's just that we're ending closer to the lows.
That's right. I mean, and the silver lining is at least that we've not... for now, we're not at the lowest point of the day. We've tried to kind of, muster our way back up, at least somewhere around the 25,400 vicinity. That's been the trajectory. At 12 o'clock, it was looking rather bleak. But since then, there's been some recovery. Still have an hour to go, so let's see how it plays out. Globally, of course, the action is quiet because of the 4th of July holiday in the US. But even otherwise, I mean, the Wall Street rally that we had even last night, that didn't quite rub off on, our market or on a market like Hang Seng. So it's very, very different. It's very, very range-bound. The market waiting for clarity on big events like perhaps earnings and, what's coming ahead on tariffs. Just to talk about the large-cap action, beneath the Nifty, you have lots of individual newsmakers, and that's what the next 1 hour is going to be about. We'll talk to you about stocks like Trent, about how a lot of the capital market stocks are sulking big time. Let's pull up Trent. It's still down. Look at that, 12% down on Trent. It's been quite a disappointment with the Q1 update. BSE is a case in point, or even if you're looking at a Nuvama or many of these other capital market plays, big cuts coming in. Now, how much of this is some sort of nervousness around the Jane Street impact? How much is it just because, some of the quarterly updates are pointing to a little bit of sluggishness? We'll have to wait and see. But these are two pockets which have definitely seen weakness, even otherwise on the Nifty. Tata Steel, Eicher Motors, Tech Mahindra, IndusInd Bank. I'm just reading out the list of Nifty losers. And you can see there's hardly a pattern today. It's literally all over the place, to say the least. Reema?
Indeed. By the way, Europe, I was just checking that out. Europe has opened sharply lower, 1% gone now on the benchmark European indices. So I'm just saying compared to what the rest of Asia and Europe is doing right now, so even in Asia, you had cuts of about 0.7% coming through for some of the indices. There you have the French index is down over 1%. And here there appears to be some battle brewing between the spirit makers in France and China. So French spirit stocks are under pressure as China has slapped high duties on an EU brand. So Pernod Ricard, etc. are trading with cuts. So I guess it's tariff, not just US versus the others, but it's happening in various different pockets as well. So keep your eye on Europe. But as Surbhi pointed out, that even though at the index level we're not doing too much, in fact, we've affected about a 50-point recovery, intraday recovery from the day's low, there are so many individual pockets. She spoke about capital market plays, defense stocks are higher, and Trent that clearly stands out as the biggest accident of the day, and the stock is still reeling with a cut of about 12-13%. But how should you position yourself in the last hour of trade? Mitesh is now with us with a few closing strategies. Mitesh trying to get back closer towards that 25,400 mark. Intraday, we dipped to about 25,330, 340. So from there has been a bit of an up move. But still, it's been a weakish week for us, down 1% at the index level for this week.
Good afternoon. I think that's true, the markets are hanging on to 25,400 somehow, while we are dipping below this level on an intraday basis. somehow it's always climbing to close around or just above this 25,400 level. So we'll keep watching this. As of now, I think my belief is that if that gets broken, we'll have some more declines and possibly 25,200 to 20 zone could be tested. I think that's where I think, for me, the bigger supports kick in. And we might not see a play below that. But for the time being, it's just a market which is just surviving at 25,400. Therefore, the index can possibly be avoided for the time being. And individual stocks should be the way to trade in the markets.
Okay, so let's talk about those individual stocks, Mitesh. What's catching your eye this afternoon?
Yeah, good afternoon, Surabhi. Hindustan Unilever, I think, is something which has come on the radar. I think that's moving very nicely. I would look at a target of around 2365 here. Recommend buying with the stock just below 2320, 2318 is what I recommend actually. And that apart, I think, the other FMCG stock which is on my name is Godrej Consumer. That's a buy with the stock just below levels of 1166 and a target of around 1225 is what I'm.
Okay. By the way, Mitesh, before we let you go, Trent, has it violated a lot of important technical levels today? Do you see supports in sight? I mean, a lot of people would have bought in with the recovery, expecting stability on overall numbers and sales. But today has been quite a shocker. Next levels?
I think very clearly the news flow was bad, but this gap down, see, yesterday I think we got a low of around 6140 and today the high is around 5785. So about 330 point kind of a gap down. And, that typically means that now, one, the stock will face a lot of supply on any pullbacks or rallies. I don't think the stock will have the strength to get past 5,800. And the minimum level which I'm looking at is 5120, which is where the stock had done some consolidation way back in April. But in the worst case scenario, expect levels of even 4,900 or just below that.
Okay, all right, 4,900 possible, looking at the charts. Got it. That caution has been placed on the table. Thanks for that, Mitesh. We'll come back to you a little later for some final strategies. But now let's get to the fundamentals on Trent. What has made the stock take such a sharp knock? Yes, we got the Q1 update. They're talking about 20% growth. Mangalam, make sense of it for us. Why is the market so disappointed? And actually, even at lower levels, buyers are simply not seen.
Well, there are a couple of reasons for this. One, yes, the stock has seen a big run-up from the lows earlier. Secondly, the market itself has been a little, jittery when it comes to high valuation names. And thirdly, no one wants to catch a falling knife yet. So these are three factors that are exacerbating the decline that we're seeing on Trent. I wouldn't be surprised if at lower levels someone buys it, or if there's a brokerage that comes in saying that, okay, now things are in the price. We would see an equally sharp up move on the stock as well. That's something that we've seen on Trent in the past. When it falls for a few trading sessions. When it rises for a few trading sessions. So today is one of those days where it's declined. The trigger for all of this was the 20% quarterly update that the company has reported in terms of growth. They've added one West Side store, they've added 11 Zudio stores. The street was hoping for better growth coming by in this year, especially at a time when the company just 2 weeks ago in the analyst meet said that 25% is a revenue CAGR that we will do. The street was adjusting itself to that 25% CAGR, which is sustainable at a time when the last 5 years CAGR has been 35%. So it's not that they weren't expecting, a lot. They were just expecting a reset lower, and the actual number has come in a lot lower than what the earlier reset was as well. So it's just that uncertainty in terms of the very near term, clubbed with the big rally that we've seen from the lows and no valuation comfort coming in for Trent, which has actually led the stock to be lower in today's trading session. Nuvama, for instance, has cut their EBITDA estimates by 9% for this year, 12% by the next year, and they've cut their target price as well from over 6,600 rupees to a little around 5880 rupees itself, and they've downgraded the stock to hold. But it's a matter of time before the company, once it reports its results, that's baked in, brokerages will start adjusting to the new normal for Trent as well, and there are, perhaps if the stock moves higher, we'll continue to see it move higher from here on.
Thank you very much for explaining that so beautiful. Sudeep Bandopadhyay, Group Chairman, Indie Trade Capital, is now with us. Sudeep, you've liked consumer discretionary in that Trent was a favorite for so many people for the kind of wealth it generated, for the business that it's built, and the way it pivoted from West Side to Zudio. But now things are slowing down. So what should investors do? Is it a good time to buy or wait for things to settle down? What would be an appropriate level to enter in Trent, and what should existing shareholders do?
Well, I think for quite some time we have been cautious on Trent, and we have been advising caution. And we've been very clearly saying the valuation does look rich. Look, Trent has got too much of competition now. There are multiple other players who have gone into the same Zudio format, and they are also expanding rapidly. Apart from this, there is this online competition which is going to come, and which has already come from multiple players, including the large Chinese names which have now tied up with Reliance Retail. So competition has intensified in that same segment where the growth was coming, and absolutely, it's a no wonder that the growth rates have come down significantly. As opposed to a 40% kind of a growth, they're talking about a 20-25% kind of normalized growth going forward. So obviously the market is disappointed. The valuation, doesn't get justified with that kind of a growth. So the valuation adjustment is happening. And at this stage, I don't think there is any point to rush and buy Trent. Let things settle down, and let's look at the valuation then. And only then we should take a call on Trent. That's our view.
Okay, all right. So Trent, a bit of a wait and watch on this one. Let's look at some more movers and shakers in the market. The mid-cap index is also completely flat, so not really giving us any sense of direction at an index level. It's all individual level stock action. So there are gainers. It's not like it's not a day of any gainers. Some examples would be a Credit Access. Credag is up 6%. As we're speaking, there are defense stocks which are rising, which we'll come to. Paras Defense, of course, is one of them. You have some of the other financial names like CSB Bank. CSB Bank came out with the first quarter update, and it seems to be a fairly decent quarter for them. That stock is up about 6% as well. So these are SML Isuzu, a smaller name, up about 8-9%. So at a very individual stock level, there is stock picking that's going on. But the index is absolutely flat. So Deep, since we're talking about some of these movers and shakers, in Tier 2 financials, all the updates that have come in, whether it's, AU Small Finance or CSB or any of the others, did you like anything that really stood out for you?
Well, I did like CSB. I think they are trying to create a differentiated bank, and they are really going about very systematically. The management also has, stabilized. Some of these smaller banks based in South used to have a volatile management, situation, but things have stabilized with a credible investor and stable management. The gold loan portfolio is doing well and it's growing, and of course, to my mind, it's a fantastic business to be in from a point of view of the geography they operate in. So I think CSB definitely looks good from a long-term perspective.
Okay, so that's a thumbs up to CSB. Credag is also up after the update. So let's do one thing actually. Let's go across to Gaurav and take stock of a lot of these financial updates that have come in banks and non-banks, because the market is very clearly reacting to the good ones. Gaurav, tell us more.
Well, let's talk about HDFC Bank. A good set of number is what we saw from the bank, and why I'm saying good set of number is that the bank is actually moving towards what the management had guided. When we look at the loan book growth, that was at around 7% on a year-on-year basis. Now, let's not forget that management has said that in FY26, they will be moving more towards inline growth in terms of advances growth. In terms of CD ratio, also we are seeing the CD ratio is coming down. Management had guided that it will come down gradually, and in this quarter, we are seeing some improvement there as well. Other than that, Bank of Maharashtra recently came up with the numbers. The loan book growth came at around 15%. It was actually a decent set, but deposit growth actually was a muted set of number in terms of sequential growth, and that is the reason why we are seeing some kind of muted reaction from stock as well. Ujjivan Small Finance Bank, on the other hand, came up with a little weak set of number. The loan book growth was at around 11%. This was because of the slowdown in the micro loan segment, although affordable housing is something which is actually driving the loans. What is worth highlighting is that now the secured portfolio has increased almost by 200 basis points on a sequential basis. Now there is some kind of concerns, and the reason being that there may be some kind of pressure in terms of net interest margins because of the secured loan portfolio. On the other hand, let's also talk about NBFCs. So first, let's talk about Bajaj Finance. A very good set of number. 25% growth is what we have seen on a year-on-year basis. and 6% growth on a sequential basis in terms of AUM. The customer base also increased, and now brokerages believe that credit cost is the only checkpoint remaining because the growth was very strong for the bank. Lastly, let's also focus on Credit Access Grameen. Now, this stock is soaring up in trade today, and the reason being that although the loan book growth was muted for the quarter because there was a one-off impact of 690 crore rupees, the credit cost and specifically in terms of the asset quality, we are seeing some kind of green shoots. The delinquencies early trend is showing some improvement. 100 basis point of improvement is what we have seen in the delinquencies. And when we look at excluding Karnataka, there also we are seeing some kind of improvement. So definitely on the back of the good set of numbers in terms of asset quality, we are seeing this stock soaring up in trade today.
Thank you very much for that. Sudeep, any of the stocks that Gaurav was talking about you like?
Well, I do like Credit Access Grameen quite a bit. Of course, microfinance went through a really, really bad phase. And I think their numbers show a very interesting fact that the asset quality finally have started slowly improving. And that's a very, very interesting, fact which has come out because pretty much the entire industry and the market has been talking about the microfinance woes. So if the recovery is already there, I think then we have probably seen the worst already, and things should start improving from here on. Of course, we are seeing also a trend that as opposed to increasing microfinance unsecured loan book, most of these players are focusing on creating a secured book along with the unsecured book, and RBI has allowed now up to 40% non-qualifying assets to be included, and that gives them a significant flexibility of creating a secured book along with an unsecured book. I think this is very interesting, and we will keep watching this space, the microfinance space, particularly Credit Access and some of the other listed microfinance players.
Okay, all right, got that. Sudeep, stay on. If we look at defense stocks as well, we've got RIA joining in. Yesterday, of course, the big headline was the Defense Acquisition Council approving acquisition proposals worth over 1 lakh crore rupees. So India continues to spend top dollar or top rupee on defense. And the excitement is for all the suppliers and the vendors. That's the index that's doing really well. RIA is joining in with more details. RIA, in addition, I think for Paras, there's also stock split, right? Paras is up 9% or so, 9-10%. But tell us more.
Well, yes, Surbi, Paras Defense is up because of the stock split. It's up about 10% today. But the big news yesterday was that the DSC has cleared 10 capital acquisition proposals worth over rupees 1 lakh crores. So let's take a look at some large projects and the likely beneficiaries of the same. The first one is the QRSAM project. This one is valued at about rupees 30,000 crores, and Bharat Electronics is the lead integrator for this one. Of this, 40% of the order is likely to go to Bharat Dynamics for the production of missiles, which will be about rupees 12 to 13,000 crores. Two other companies, Apollo Micro and Astra Micro, are also expected to receive smaller orders for components and subsystems for the same. The next one is the MCMV order, which is the mine countermeasure vessels. This one is estimated at about rupees 44,000 crores, and all three shipyards, which are Cochin Shipyard, Mazgon Dock and Garden Reach Shipbuilders, are expected to bid for this tender. And this order may be split between the two lowest bidders. Some other projects that have been cleared yesterday, the armored recovery vehicle, estimated value about rupees 10 to 14,000 crores for this one, and BEML and Bharat Forge are the likely beneficiaries for this. Apart from this, we have the moored mines, electronic warfare systems and integrated common inventory management systems, as well as the super rapid gun mount that has been cleared yesterday. So some other beneficiaries can be BEML, BHEL and data patterns, in addition to Apollo Micro and Bharat Electronics. So today, all of these counters have been buzzing away in trade, and even the defense index was up over 1.2% and 1 point in trade today.
Thank you very much for that. Sudeep, a quick comment on defense stocks from here. If you had to pick one, which you like the most, where the risk reward is favorable, which one will it be?
Well, I have been liking BEL for quite some time. Valuation has moved up. It's not cheap, but I still believe that this is a re-rating candidate, and at some stage that re-rating will happen. So if somebody has a long-term view, I think definitely BEL is a good buy, even at current levels. The other stock I would like to highlight is BEML. Again, the opportunities are increasing significantly as we are watching, and performance also has improved quite a bit over the years. So again, a patient investor can look at BEML as well.
Okay, all right, got that point. Stay on. We'll Sudeep just come back to you in a bit. There's important news coming in on JP Associates, and I think we've got our colleague Ritu joining in with the latest. We do understand from sources that suitors for JP Associates have submitted conditional offers, and looks like the highest bid has come in from Dalmia Bharat. Ritu, what are you picking up?
Yes, Ruby, it's a bit of a surprise, but as we've been reporting, some of India's biggest corporate houses, Adani, Vedanta, Dalmia, Naveen Jindal and others have submitted offers to acquire Jaiprakash Associates. But there is a major catch because most of the bids really hinge on the outcome of a land dispute that is still pending in the Supreme Court. Now, in absolute terms, and there are many conditions attached to all of these bids, and not all of it is upfront, we understand it is Dalmia Bharat which has placed the highest offer at a little over 14,600 crore rupees. But if JP's Sports City land dispute in Noida is not resolved, they could reduce their offer by around 2,000 crores or even more. Now, our sources indicate Vedanta Group, on the other hand, has offered about 13,600 crores. Again, if the land was not cleared, they may withdraw the bid altogether. And then there is Adani Group's offer at about 12,250 crore rupees, which includes some non-convertible debentures as well that are payable over more than 4 years. And while the bid again is conditional, our sources indicate that Adani's offer may stand irrespective of the land dispute outcome. Then you have Naveen Jindal's Jindal Power, which is bid, we understand, about 10,300 crores, also contingent on the land matter, and PNC Infotech is the lowest at 9,500 crore rupees. Now, here's the core issue to remind the viewers. Around 1,000 hectares of land under JP's Sports City project was cancelled by YEDA, and that cancellation was upheld by the Allahabad High Court, but the resolution professional has challenged it in the Supreme Court, where the case is currently pending. Now, these are still the first round of bids. There will be negotiations with the lenders, and possible revisions are also possible, to these offers that have been made. So we'll have to see who comes out on top. The process is very much far from over.
Thank you very much for that. Sudeep, any thoughts on JP Associates, the potential buyer, or any other stock that you'd like to talk about which catches your attention today?
Well, I think, one stock which definitely catches attention is the Marico results. I think it's a very, very interesting set of update which they have given to the market. After a long time, one of these FMCG company is talking about rural demand being robust and urban demand also being stable. And that clearly reflects in their numbers. While international business has been stable for quite some time, the domestic business was the challenge for Marico for some time, and the premium hair oil category was suffering. Now, with what they have announced today, what the update they have given, I think it's a very clear signal that probably things are improving on ground, and we will have to wait and watch for the other FMCG companies and their numbers. But if the Marico trend is maintained, then I think it's good time coming back slowly for the FMCG universe.
Thank you very much for that. One more stock with a big fall today is Dreamfolks. While the negative news has been known, the stock was every day falling 1%, 2%, 3%, but today it's fallen close to about 12%. So there's a very sharp fall coming through in Dreamfolks. And now from its 52-week high, it's off close to about 63%. So big fall today. And even Global Civil Projects. This is a company which got listed earlier this week. It's still holding up above its issue price. I think the issue price was about 70. The stock is down 5% at 81 rupees, but still higher than its issue price. Ellenbury, HDB Financial Services, all the stocks which listed on the Lal Street this week are seeing a bit of a pullback today. Get into a break. Sudhi, thank you very much for joining in. As we do that, here's a reminder for all our viewers to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Okay, welcome back. A while back, you saw some important updates flash on the screen with respect to Bosch. Now, we know that Bosch, only a part of their business in India is listed, and it's the listed entity. The ABS business, which of course has been catching the headlines of late, because ABS norms will be mandatory for bikes, all bikes, even 125cc. That's been making headlines because Bosch is a big player in that space. But let's understand what is this restructuring that is being spoken of. It's an exclusive that our colleague Vivek is picking up. Vivek, break it down, totally simplify it for us. What are we talking about?
Well, that's right. So what we are picking up from our sources is that the German MNC Bosch Limited is in focus. This is on account of the fact that the company is looking to bring into its listed entity fold two key business entities which are unlisted and which are privately held by the German parent itself. So the two unlisted entities that we are looking at and that we understand will be brought into the fold of the listed arm is Bosch Chassis Systems and Bosch Automotive Electronics India Private Limited. So, Bosch Chassis Systems is the entity that actually runs and operates the anti-locking braking systems business, which was in the news recently, and we'll delve a little bit more into that a little later on, as well as the electronic systems into the listed entity. Now, this particular ABS, or the anti-locking braking system, was in the news recently because the government made it mandatory for two-wheelers to have them. And remember, this particular firm actually has close to 60 to 70% of the market share as far as that particular segment is concerned. So it will be a meaningful EPS accretive, in case this particular transaction does go through. What we understand from our sources is that the company has already appointed a consultancy firm as well as investment bankers are working on the deal. We understand that this deal is in advanced stages. Earlier today, we also wrote to the management of Bosch as well as their corporate communication team. We are yet to hear back from them, but this is going to be an important deal, especially remember, the entire auto ancillary space has been in focus. Even recently you saw a deal, something along very similar lines that came as far as the Gabriel Group was concerned, and also this particular ABS systems are in focus on account of the government regulation that did come about.
Oh, yeah, absolutely, Vivek. And congratulations on that break. This is important. The stock is reacting. It's up about 3.5% on an otherwise flat day. So just reiterating that these two entities, Bosch Chassis Systems and Bosch Auto Electronics, they will become part of the listed entity. Any idea of the size? I mean, they're private entities. So, I mean, I don't know if you would have rough numbers offhand. But you're saying this will be EPS accretive. These are largely positive businesses for Bosch.
Let me give you a little perspective. So FY25 end, top line of Bosch was slightly above 18,000 crore, profitability in excess of 2,000 crore. Now, both of the entities that we're talking about, especially Bosch Chassis, that is a profitable business. And again, we don't have the actual numbers because it's not a listed entity, but we understand top line was in the range of 4,000 crores. And it is a bottom line positive business. The other business, very similar 3.5 to 4,000 crore top line, but we understand that it's EBITDA positive, but bottom line may be slightly loss making. But overall, this particular deal is expected to be EPS accretive simply because of the profitability as far as the Bosch Chassis business is concerned. And also, there are expectations from the management that this should unlock some value in terms of a higher valuation multiple being given. The closest peer will be an Endurance Technology. Remember, that particular stock also was in focus on account of the ABS mandatory rule that was imposed recently.
Yeah.
Okay, thank you.
And Endurance, by the way, just to add, because we spoke with the Kotak analyst, just reminding our viewers, Endurance has a much smaller market share in ABS. Yeah. Bosch has the lion's share of the ABS.
And now that's going to come into the listed entity, Bosch Chassis. So if you want a direct play, if the government indeed does implement mandatory ABS for two-wheelers and you want a direct play, it will be Bosch. So that's the big corporate restructuring that Vivek, our colleague, has picked up from his sources. And that's a CNBC-TV18 exclusive. And the stock is moving up even more now, 4.5% up on Bosch. Thank you for joining in. Mithun Ashwath, Managing Partner, Kiva Advisors, is now with us. Mithun, first, would you have any thoughts on Bosch and this potential corporate restructuring, and come in on the broader auto ancillary space? Any stocks in your portfolio?
Yeah, thanks, Rima. I think on this transaction, one needs to understand what is the valuation that Bosch will ascribe to these unlisted entities. Obviously, the potential is large, but like your colleague mentioned, they may not be that profitable. So we need to understand what kind of valuation will be ascribed to these companies when they are merged. But definitely a positive sign from a multinational company that they want to actually merge unlisted companies into the listed entity. Because earlier times we've seen actually MNCs trying to go more private and run their businesses in private companies. So this is definitely a good sign.
Okay, interesting. All kinds of things happening with these large MNCs. Big focus on India, whether it's Bosch, whether it's the other listed peer, Siemens. So much of reorganization going on. And this one, I mean, the shareholders will be happy to know that some of the value-accretive unlisted businesses now come within the listed fold. Mithun, hi, great to have you on. So we just kind of, went on a tangent with that important news break. But let me sort of pull back a little bit and get your sense overall on the space. We're talking about capital goods. I mean, it was the market's darling for a long, long time. Then defense kind of, came and took over. But how do you look at these companies when ABS is just one small part? But otherwise, how do you look at the capital goods play?
I think, if you see the auto components or the manufacturing side, the opportunity is very large. In certain segments, it's actually, you're talking about substitution. Right? It's import substitution. So we're not really looking at, even if the Indian market doesn't grow that much, the opportunity for that substitution itself is quite large. You've seen that on the AMS side. We are seeing it now even on the auto component side. Another space where, there's tremendous focus from the government is on the power sector. And we've seen the kind of growth that the T&D space is witnessing. And there are very few companies listed focused on each of them. And I think these spaces provide good headroom for growth over the next 2 to 3 years.
Okay, got that. Any tactical trades in IT ahead of the earnings season, Mithun?
I think, Rima, obviously, most people are kind of cautious and the expectations are not too high. So I think, and IT is kind of underperformed. So I think we could see some bounce in some of these, even in the large cap names, which are kind of at the lower end of the valuation spectrum, especially considering, I think, even in the US, there could potentially be rate cuts going ahead. So I think there could be some bounce. But in terms of actual numbers, I don't think they're going to be kind of flattish, I think, even in this quarter. Most of these companies are talking about single-digit sort of revenue growth for FY26. I think it's the mid-cap IT companies where the growth is higher. And obviously, valuations also are higher there. But I think that's where the growth is expected.
Okay. Mithun, what about overall markets? Happy to deploy additional money? Or waiting by for corrections? Corrections are not really coming. The market's not running away also, but it's not correcting also. It's been fairly steady. So how are you going about it in terms of deployment now?
Yeah, I think, Surabhi, I think the market is looking at spaces where there's value or where there's very high growth. I think there are numerous opportunities which are coming by in the recent past through a lot of these M&A special situations. So that is a space that we are constantly monitoring. A number of companies have got demerged, so they are fresh listings and potentially can provide good upside. And there are some companies which still to be demerged, even on the MNC side as we speak. So that's, I think, a space where one needs to really monitor, and bottom-up opportunities will definitely be there in that space.
Okay. The one area that has been sort of something which has always stirred up a debate in the market is defense, Mithun. The stocks kind of look at it. I mean, again, today you have an announcement, more acquisitions by the government, and the stocks are again flaring up. What's your sense? Have you taken exposure? What would the approach be now?
Yeah, so I think we've been quite positive on that space. We have taken exposures and continue to hold them. They're volatile. But again, this sort of comes to that import substitution. The government is also growing the expenditure on defense, plus import substitution is happening across the space. So, I think the opportunity for the private defense companies is going to be very large. It's the public sector companies where, most of the orders do flow in, but they are getting a lot of work done through a lot of ancillaries and private defense companies also. So there are some larger ones where, like a Bharat Forge or someone where, maybe it's not really representing in the stock prices or the market cap right now, because obviously the auto space internationally is not doing that well. It gets kind of masked. But I think, opportunities like those over the next 2-3 years will be, I think, will provide handsome upsides for investors.
So the stocks which you hold in your portfolio in defense would be?
We have, exposures to Bharat Forge. We also have BEL and HAL in, older clients, and we also have BEML.
Okay, so fair amount of defense exposure. Quick, what trend? Was it ever a part of your portfolio?
Yeah, I think for all our historical clients, we do own it. In the recent past, over the last 6 to 9 months, we've not added for fresh clients. But I think, days like these, when a company which can compound at 20-25% over the next several years definitely presents an opportunity. I think one statement at an AGM should not really be read into so seriously. But I think, this will present an opportunity for long-term investors.
And finally, before we let you go, Mithun, capital market stocks. Again, I have to ask you, same thing, always a big debate in the market. What sense do you get? I mean, I don't know whether this Jane Street episode is going to have any lasting impact or not. But in general, positive, negative, neutral?
Honestly, this is one space that we kind of missed, I think, a couple of times. Even in the Jan to March correction, they, I think, all fell 30-40%, then bounced again. But I think what's happening here after this Jane Street issue, there could be changes in terms of regulation, in terms of how many expiries you have. Do you have weekly expiries at all on the Nifty? We don't know what SEBI is going to do. So that is something, because obviously earlier we never used to have that. We used to have monthly expiries. So if they want to actually curtail speculative activities, I think that's what the market reaction is. But I think the wealth management sort of distribution-led companies, I think those are more of a secular trend because of financialization. I think that's a space which I think if there are corrections, one needs to definitely revisit and relook.
Okay, thank you very much for that. Get into a break. We'll come back and get a check on what dealing rooms are saying in our segment D Street Chatter. Nimesh will join in.
Welcome back. There's some green back on the screen, so it's not so bad. Actually, the market's perked up quite nicely in the last half hour. Look at that. The Nifty, I mean, when we started off was so sluggish. And from the lows of the day, where we were almost sort of going down to 25,350, now it's a very nice, smart 100-point recovery on the upside. So good time to bring in Nimesh. Nimesh, I don't know if it's Friday factor or something else, but suddenly the screen is looking brighter.
But, you might see that that screen is looking brighter today, but actually, consolidation was the buzzword of this week, right? Entire week has seen in a very narrow range. The markets have been, or the Nifty and Bank Nifty both have been in a very narrow range, and there is real lack of participation or lack of triggers as well, so to speak. So I guess the big trigger to watch would be, of course, the US-India trade talks and trade deal. That would be a big trigger for markets, and of course the earnings season. The initial reactions are pretty sharp for the Q1 updates in many stocks. We saw what happened to Trend today. But, again, I'm not saying a big reaction to in terms of flows or for that matter, any directional moves in the market, at least in the very short term. I guess the big story of the day was the SEBI order on Jane Street. And we saw a big reaction to the capital market plays today. So BSE, Nuvama, Angel One, all are under pressure today. And there is a sense that maybe you'll see a bit of impact on the volumes in the very near term because of this SEBI order, interim order. So that's one big where we saw a big accident today. From a flow perspective, one thing which has been consistent of late is the buying in the PSUs. Today, for instance, the OMCs stand out in terms of big buying as well as the PSU bank stocks. So the one consistent theme has been a bit of outperformance in the PSU names, but otherwise it's been a week of consolidation, and so is the trend today as well.
Yeah, absolutely. Trend was case in point, I guess, that the market has absolutely no mood for any disappointment at all. It tells us how to prepare for the earnings season as well. Ramesh, what about individual stocks? What buzz are you picking up today?
So the first stock on my list is DCM Shriram. The stock is down 4% in today's market, but yesterday the stock rallied 15% and the volumes were on the higher side. And the sense I'm picking is that maybe there is a corporate development around the corner in DCM Shriram. It's a kind of a conglomerate. There are a lot of businesses, and there could be potential value unlocking there. So that's the buzz as far as DCM Shriram is concerned. That's the first stock. The second couple of the PSU names, PSU bank stocks, both Union Bank and Canara Bank, both stands out in terms of very aggressive FI buying today. So expect high delivery volumes in both those names today. And the last stock is Z Entertainment. We've seen a bit of a outperformance in Z as well in the last few weeks. Ever since, in fact, the promoters have announced to put money via preferential warrants. But now there are first signs of some bit of institutional interest back as well in Z Entertainment. So there is a very small buy flow, but nevertheless, there is buying interest from larger FIs in Z Entertainment at current price.
Thank you very much for that. Mitesh is now back with us for a few trades. 15 minutes to go. Mitesh, what do you have for us?
See, Infosys is something which is climbed up to the or near the day's high. So BTST there with a stop at about 1631 for targets of 1665. And the other one is the refinery pack is also doing very well. So I've taken HPCL as a BTST with a stop at about 438 half and a target of around 452.
Thank you very much for that. Now let's get back to the big story of the day, and that's SEBI issuing an interim order barring Jane Street Group from the Indian equity markets and impounding gains of about 4,800 crore rupees on account of index manipulation. We have with us senior advocate H.P. Ranina joining us on the show. Thank you very much, sir, for joining in. Kindly share your thoughts on the subject. How strong a case does SEBI have, or what Jane Street has done is still very much within the rule book? So they've amassed profits, but there's nothing wrong in what they did in terms of the strategy. So legally, what's the standing of both the entities?
Well, making profit certainly is not a crime or illegal, so long as it is made in conformity with the rules and regulations of SEBI. Now, the question is, they have imposed certain very strict orders saying that you cannot trade, your assets will be frozen, will be kept under check. There must be some reason for this. I don't know exactly what the facts are before SEBI, but obviously SEBI has made an investigation. They must have taken their own time to do so. And based on that investigation, have come to the conclusion that certain things have gone wrong. They have not acted in conformity with the rules and regulations of SEBI, and therefore they have made gains which are not legally justifiable. Therefore, they have frozen them, they have put them under escrow, and they have passed certain orders. Now, what does Jane do? Jane Street Group will have to go in appeal to the SEBI Appellate Tribunal and prove its case that whatever SEBI has done is wrong because they have acted in conformity with the rules and regulations, and therefore SEBI's action is unjustified in law. So that's all that the Jane Street Group can do and get some relief from the Appellate Tribunal. And if they lose at the Appellate Tribunal, then of course they can also go to the Supreme Court as a final authority.
Absolutely. So this could wind up all the way at the apex courts, or absolutely take that point. Yeah. I think the central point of the arguments, and we'll know more as this moves through the various forums and courts, I guess the central point is going to be whether taking opposing positions, or trading strategies where your positions in the cash market might be different from your positions in the futures and options market. I mean, technically, as far as we're aware, it's not against Indian securities law. But then market manipulation or market abuse, that's a totally different realm. So do you think the law currently, securities law as it's currently framed, it will give enough powers, or it gives enough powers to SEBI to check what the regulator feels is market abuse?
Gurpreet, the important point is that is a matter of factual data. The rules and regulations are always there. They are very general in nature. It is for each entity to ensure that they fall within the four corners of the rules and regulations. Now, as I mentioned earlier, SEBI has made some investigation because they don't take any action without taking proper steps by way of investigation. At the most, SEBI could have ordered a sort of a forensic audit into the accounts to prove that what Jane Street has done is totally wrong. So it's a matter of facts. Based on facts, they've come to a conclusion that there has been a gain which is not justified in law, and therefore they have taken the action which they've done. So let's see whether the factual position is justifiable. And as I said, the only solution now for the Jane Street Group is to go to the appellate tribunal and prove their case before them.
Mr. Ranina, since this is, a big crackdown against a global giant, we've seen SEBI act in the past, whether it's in the case of co-location, etc. But this time, considering that this is one of the largest, algorithmic high-frequency trader in the world, what kind of a signal does it send?
Well, the signal that it sends is that however big you may be, you're not above the law. And if you've broken the law, we'll take action against you. Now, in the past also, as you know, SEBI has taken action. Sometimes that action has been justified. Sometimes the appellate tribunal has said the SEBI was wrong. So therefore, the only solution is let them go to the appellate tribunal, let them prove their case, let them bring out the facts and figures, let the appellate tribunal feel whether the SEBI action is justified or unjustified. And thereafter, of course, the consequences will follow. But this only shows that rules and regulations are rules and regulations all over the world. They have to be upheld. And however big you may be, you may still be in contempt of the rules if you have not followed them strictly in accordance with law.
Which sounds absolutely morally upright. It's something that I'm sure all investors in India would want to see, an orderly, regulation of the securities market, sir. But the issue is it has to be held up in court. Yeah. So now I go to a wider question. And again, to Rima's point, even I don't remember in memory when India's market regulator has taken on a very sophisticated, very large and deep-pocketed global trading firm. Do you think that, SEBI perhaps will have the teeth, the tenacity that would be required to fight this all the way out?
Well, they'll have to fight it out. Having taken this stand, having taken this action, SEBI will have to justify its action before the appellate tribunal. And with all due authority, they'll have to do it. Now, the appellate tribunal, as I said, may order a forensic audit in the accounts to ensure that whatever has been done is contrary to law or not contrary to law, that they have acted in conformity with law. And if that audit shows that they have acted in conformity with the rules and regulations of SEBI, then the SEBI action will be set aside. It will be quashed. And of course, Jane Street will be vindicated.
Okay. All right, Mr. Ranina, we'll leave it on that note. Thank you for the perspective. I think we'll require your wisdom again. I'm quite sure if this indeed goes up to the higher courts as you're also envisaging. So we look forward to more perspective and more support from you. Thank you so much for joining us this afternoon. Well, on that note, we'll take a very quick break. And as we do that, here's some good news coming in for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or from Google Play. Or you can, of course, scan the QR code on your screens as well.
Welcome back. There's one more stock we didn't chat about, and that's Bharti Hexacom. So today, Macquarie has double downgraded Bharti Hexacom. From an outperform, it's come all the way down to an underperform. And this is after the stock has near doubled in the last 1 year versus a paltry gain of just 6% for the mid-cap index. So big gains and big outperformance for Bharti Hexacom. And that's the reason why Macquarie has downgraded it. That said, let me make it clear that they like the company. They like the fundamentals, they like the return improvement, the higher ARPU, and they've in fact kept a target price of 1480. But in the bull case, the target price is actually at 1900, which is where the stock currently is. But base case, they do see the stock headed to 1480. We have with us Hemang Jani joining us on the show. Hemang, thank you very much for joining in. Well, the big stock of the day is Trend. What are you advising clients now to do on Trend? What if the new normal is a 20% growth for Trend? If that is the case, then where should the stock settle at? What would be the appropriate valuation and stock price for Trend?
Yeah, hi Rima. Thanks for having me. So clearly, I think what has happened is that the trajectory of the growth has been steadily coming off trend, somewhere around 35-40%. Just recently, about a month back, we had indication coming from management that the growth on a sustainable basis would be 25%. And definitely this update came as a bit of a shocker. And in the meantime, the stock continues to trade at very high valuation, somewhere in excess of 60 times FY26. So I do think that there is a case for some sort of readjustment, and also clear is that this is just there is a sense that there is going to be a lower growth trajectory for longer time. So we would definitely avoid buying into it till we get further clarity from the management about the growth trajectory. So for the time, we'll avoid.
Are any of the capital market plays, the Nuvamas, the Angel Ones, the BSCs, which have tanked on the back of this Jane Street? Because this episode is going to play out. It's not done in one day. Tomorrow there could be good news, day after there could be bad news. So in light of that, with this overhang on these capital market plays, what would be the approach to stocks now?
I think definitely some of the listed companies, be it Angel One, Nuvama, of course, because Jane Street had their tight relationship with them, so there is going to be a certain amount of impact. But I think that BSC, the impact looks to be a bit exaggerated, because at the end of the day, when it comes to weekly option expiry, there is not going to be a significant impact on their volumes, and at some point things are going to normalize. So if there is any significant correction in BSC because of this, certainly look at buying into it. But I think discount brokers, we have to wait and see how much the impact could be in terms of volume, because at the end of the day, a large part of the volume that they are getting, the revenue that they are getting, is from the expiry day phenomena, where some of the hedge funds and Jane Street was a major player. So definitely we would like to avoid those names, at least in the near term.
Many of these gas stocks are higher. IGL, MGL, and PNGRB has come out with an amendment. They're planning to reduce the number of zones from 3 to 2, which will bring down the complexity, perhaps have uniform pricing. Explain it to us. How does the PNGRB news impact a company like IGL?
As far as natural gas pipeline tariffs are concerned, are definitely positive for some of the companies like IGL, where we think that the benefit could be to the tune of about 0.7 per SCM. And we do think that more than anything else, it reduces a certain amount of competition, and there is going to be a fair pricing as far as natural gas is concerned. So we think that overall it's definitely positive, but the biggest beneficiary be IGL, given that their margin and earnings upgrade be to the tune of about 12 to 14 rupees per share.
And finally, pharma is doing pretty okay. You've got a Dr. Reddy's with a gain of close to about 1.5%. A couple of the others like Loris, Natco, Aurobindo Pharma, 2-3% up on that. Marksans Pharma, Zydus Life, Lupin, all in the green. What's happening here?
I think, Rima, two things. One is, of course, the quarterly previews, where some of the companies like, let's say, Aurobindo and Lupin, we do think there could be a decent amount of growth, and As far as API players are concerned, I think lot of slabs after a gap of almost about 2 quarters, you see a very significant earning upgrade. So that is what is probably driving some of the stocks, and also maybe some sort of if we have trade deal with US, which could happen over the next 2 days. Of course, pharma may be separately looked at, but there can be some relief for some pharma companies where, because of earlier concerns, the sector itself did not do well. So we do think that there will be some relief if we have, some sort of a treaty with the US, and of course the quarterly reviews, there can be some positive surprise in terms of growth.
Hemang, thank you very much for joining in. Enjoy your weekend. Like a minute to go as we wrap out the trading session and the trading week. The Nifty is closing with a minor gain of close to about 0.6%, though for the entire week, the Nifty is going to end with a cut, a little more than about 0.5% on the mid-cap index, while the Nifty is going to see a gain of about 0.5%. Banks did well today, courtesy an ICICI Bank, which lifted the index towards the close of trade. Bajaj Finance, on the back of the 24% AUM growth, was the top gainer. IT stocks gaining ahead of the results from TCS next week. Infosys, Wipro, HCL Tech, all on the buyer's radar. On the way down, Trent was the biggest casualty. The street disappointed with the mere 20% revenue growth, in Q1 as per the provisional update. You've got a Maruti Suzuki, Eicher Motors correcting a bit, Tata Steel under pressure as well. On a couple of the other names which deserve mention, Bosch, Marico, L&T Finance, AU Small Finance Bank. These were some of the updates that we got that the street liked. Capital market plays, Nuvama, Wealth, BSC, Angel One, Weekend Trade. The Jane Street episode played out, and then you had Dreamfolks. Another down day, 13% gone on that. We leave the Nifty above 25,450, a gain of about 60 points, but for the week, we're still down close to about 0.6% at the index level. That's a wrap on Closing Bell. Thank you for watching. Don't go anywhere. Editors Roundtable is up next.